Hello, this is Dean Malone with Compass of X. Hope you're doing well today and you get some good trades. In my trade room that I run during the U.S. sessions, I'm often asked by folks, what does the crystal ball have to say for the day? It's as if I look into this crystal ball and it tells me what price is going to be doing. As a matter of fact, though, several advanced traders have the skill set to use certain tools to project where price will be the following day. Wow, couldn't we all be able to do that? Well, I'm here to tell you it's not that difficult. There are a few best kept secrets as how to do that. Today I'm going to share with you one of those secrets. It's simply using a fib tool to look at retracements going into tomorrow or looking at extensions going into tomorrow. Now, if you haven't joined me in my live active trade room, please do so. I run the U.S. session from 8 a.m. Eastern till about the European close every single day, Monday through Friday, and the best part is it's free to you. We have a community of traders. We all share different ideas and different trade setups, and it gives you the opportunity to follow along with the signals that I give or some other potential trades that other members of the room share. Simply go to www.compassfx.com/forex signals and simply register. It's a free access to the room and gives you plenty of opportunity to catch some potential trades during the U.S. session. Now let's get back to a technique to project tomorrow's price levels. Now before we jump into this, let me give a full disclaimer that there are no guarantees. There are no tools that specifically say this is exactly what price is going to do tomorrow. There's no such thing. There's no holy grail indicator that does that. So what we want to be as a trader is to determine logical processes that identify where the market will be, whether the market goes short or if the market goes long. Now take a look at the Aussie dollar on a 30-minute chart here. You can see that we have yesterday in these black lines. So this is November the 14th, the whole day, and I've simply laid out the high of the day and the low of the day. And we see what the market's done today. Now going into the 15th here, we're not sure what the market's going to do right at this point, but we can potentially project using the Fibonacci retracement tool and looking for potential extensions. So if I take the Fibonacci retracement tool and I simply run from the bottom up to the top here, I've already placed a couple of extensions into my Fibonacci retracement tool, the 127.2 and the 141.4. Most retail traders are told to simply look for the 1618 or the 200. There are other videos after this video completes. You can go to Fibonacci videos and you can watch how to put these levels in to your Fibonacci retracement tool in MetaTrader 4. But if you'll notice here that what took place is as the market got going, we got a bit of a retrace. And you can turn your fibs the other direction to find out what the retracement was. But take a look at what took place. The market eventually comes right back down to the 100% here, bounces back up to the 786, which would be normally a 23.6 retracement here, and then we get a move all the way down right to the 127.2. As if somehow or another we knew where price was going. Then the market pushes right back up to the level again, pushes back and forth, and again, we went right back up to this level. Now let me turn my fibs around and let's just take a look here at the retracement that took place. I'll move this way. And you'll notice here that that retracement was a 23.6 right here and came off. It attempted the 38.2, couldn't get above it, and then started falling back to the downside. But we flip the fib retracement tool around to calculate the bottom here. So again, a pretty simple technique. You just start the fibs in this direction from the low. So if you break the low, you start your fib retracement tool at the low and you run to the high. And look what the market did. It went right to the 127.2. Now, you might be thinking, well, Dean, that's only for maybe one pair now and then. No, let's take a look at this because you can do this intraday. You can do it on a daily perspective and a weekly perspective. Take a look at this. I'm going to look at the CAD here, and again from yesterday I simply went from the low to the high. The market did retrace back about a 23.6 and then started working up back to certain fib levels. Here we're back to the 100. Look at that move right to, it just threw this big bar up, came back down a bit, but look, 1, 2, 3 hit right at the 127.2 level. Then we progress up to the 141.4, then finally up very close to the 1618. So as you're trading here, you already have an idea where price is going to be tomorrow. So if you're watching this video right now, what you can do is say, okay, I know what the low of yesterday was, I know what the high of yesterday was, run your fibs, run the fib retracement like I've done here, and look at also those extensions, 127.2, 141.4, and mark those levels and look for the market to potentially go that direction. If I were looking at, let's say, the CAD went down today, I could simply go to the low, to the high here, and had the CAD move down, see, sitting right there, that 23.6, had the CAD move down, I'd be looking for 149, 136, 122, and all the way down here at 103. These would be levels that I would be looking for the market to push down to. Okay? Now let's take a look at this from a weekly perspective. All I simply did was I looked at last week. So right over here we have November the 7th to November the 14th. I marked the high, marked the low, and here you can see how the market, we stayed inside that high to low. But we had a very strong retracement up last week. The market settled out at about a 786 level. This is what I call a 786 failure, where the market moved up there and couldn't go any higher. Now where's it going to go from there? Run the high to low and mark your levels. 618, 50. Look at this 38.2. Look how long it just stayed right around that level. Then push down to 23.6. It's making its move on down. Back up to it. And then down. So again, this is from a weekly perspective though, looking at the whole week of this week. From the 14th through the end of this week, we have all these levels laid out. Now if you take a look at the monthly perspective, look at this. I'm going to look at both September and October and how the market played itself out. From the high up here to the low here, you can see that we had a retracement back to the 38.2, the 50%, up to the 618, all the way up here, even to the 88.6 level. Market fell right there and fell back over. Here we are in November, a month and a half out, and we're back down exactly to a level. Now let's just take a look at October and how those levels impact November. So in this case, what I'll do is I'll move this up here because we have movement inside. So I'm going to look at those retracements. And so the market moves from this high point down to 23.6, then down to the 38.2 today. And now what we have are levels where I'm looking for the market to go. So I'm literally in my trade room, I told folks I'm looking for the pound dollar to eventually move down to around 156 level, between 156 and 156.20. Why do I think that? How do I know that? Because that would be a nice 618 retrace on the pound dollar from last month. From that low to that high, a 618 retrace puts us right at 56.11. That's a target that I have in mind, because at that point we could potentially have a 1, 2, 3 up pattern, or we come down and test a potential retracement all the way back down to the low point. So folks, use this technique. It's again real simple technique. You look at yesterday's high, yesterday's low, and you run your fibs, look for retracement levels, 23.6, 38.2, 50, and 618 are the typical levels. Then look for your extension levels. I like to look for the 127.2 and the 141.4. Well folks, I hope some of this information will help you in your trading. Again, there's no magic crystal ball here. It's simply using the tools that are there to help you determine where the market's going to be. And believe it or not, this is a technique that some institutions use because they know where the market's been before, and that helps them determine where the market's going to go. I often tell folks that price has a tendency to go back to where it's been before. Remember that. That's a rule that many market participants live by. Well folks, this is D Malone with Compass FX. I hope some of this information has helped you out. and will help you out in future trades. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.